The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 8th day of October. My pleasure to be here Monday through Friday, noon till 1 p.m. Eastern Time. And this is really something I'm going to run the numbers and then I'm going to do something. This is like a technical Friday because it is really important right now to go through these different indices. But I do want to go through some of the technical aspects of, say, the Dow at this particular point, which was the strongest of all the indices going up to last week, Wednesday. Since then, it's joined the crowd. So the Dow right now is down 167 at 26,279. The S&P is down. So the Dow is down 0.61%. The S&P is down 63%. It's down 18 at 2867. Made that double top. Remember the double top we were looking at on the 21st of September. 2940.91 has a cup formation, hits the 14-period exponential moving average, and it rallies back, and then it fails just underneath the 2940. It goes to 2939.86. The rule of thumb in this particular cup formation is, and yes, I had questions about my CD introducing the Chapman wave methodology, but I discuss it a little bit more. We actually ran out of CDs. I'm trying to get this organized. I know most people don't use CDs, but a lot of our listeners, I'm sure, still have a computer, a laptop, say that, or a desktop that can take a CD, and it's really worth it. So I'm trying to, I hope I'm able to garner at least another few dozen that I can make, and they'll be available sometime soon. We'll see. I'm working on it. We'll see if it works out. But this cup formation says if there is a move 1/3 to a half below the left side lip, in this case that 2940 level, there's a real good chance that you're going to not only test the low bar, but if you close, not you, whatever it is we're following, closes underneath that cup low bar, there's a good chance you can get to 1-to-1 to the downside. Well, we've gone more than 1-to-1 to the downside. I'm going to discuss this Chapman wave Roman candle in a moment, but let's just go on. QQQ, NDX 100 down 2.30, down $1.20, 1.27% at 177.90. Has gone from the high of 187.53, the double top high. And that was back on the 1st of October, was the last one, and it comes plunging down, and it is now down 10 points from that level in just 1, 2, 3, 4, 5, in 5, 6, 7 sessions. That's a lot. But what's really important, you see this trend line support in the weekly chart? There is a huge evidence that we are making a peak F in the weekly chart. I'm going to make that for those of you who know the Chapman wave methodology, yes, it's peak D where we're looking at potential turnarounds, either up or down. That's really key, that fourth highest peak. When it goes to an F, and that F is confirmed because there's negativity in one of the, say, the 14-period moving average, a key support level, or the MACD and stochastic are sharply declining, as they are here. You now have to start looking at that monthly chart, and that just says real simply 173.40 is the 9-period moving average support. In the monthly, if we aren't very close to some kind of a bounce, that's just not going to be a good sign. IWM, the IWM is the Russell 2000 in leg G to the downside. What a big move. 173s down to 160, 160.93 as we speak, down $1.23, 123. And that weekly chart is absolutely a peak. Gee, I've been talking about that for a little while now. And the monthly chart, G/C, it's beginning to look like that. Very long term. Look at this very long term resistance trend line. Look at that. Goes back years. And we went right to it, then above it, closed above it once, and now we're sharply below it. In fact, we're hitting the 9-period moving average support as we speak. at 160.95. All right, so not such a good sign there. Now I want you to do this. If we go to the gold is down, I think it was down 15, 16, yep, down to 15.6 right now. That weekly chart, I've been saying, it just doesn't look good. Not only is it in a sideways pattern in the weekly chart, and the monthly actually, but look, that pink line, the 9-period exponential moving average, resistance at 1205.9, it has not been able to close. It's only touched it a couple of times, but since it broke below it back in the week of the 20th of April, I mean, that's where we went along the dollar, remember, at 90. That's a long time. Look at this trend line straight down from the, right from the 1380s down to where we are now. 1167 was the low that was made about a month and a half ago. Now it's at 1189. This is just not very good. Look at silver. Silver's doing the same thing. Silver's down 0.33 at 14.31. Peak E in the daily. It did have a very nice move to the upside in the weekly. It couldn't close above the 9-period moving average, even though it went above it, and now it's below it. And that's not good. So we have to look at the dollar. Dollar was running earlier on nicely. It's up 0.22 at 95.87. It's not really breaking away to the upside, but it is holding beautifully, especially after the pattern in the weekly, holding above all the moving averages. And the monthly chart has really improved. As I showed my subscribers to my opening call over the weekend, that dollar, I like the action very much, and we do remain long. Okay, now, if you look at crude oil is getting a little toppy. Made a peak G in the daily. It's at 73.76, down 59. Leg F/B in the weekly chart. I'm not going to say either way, just to say that a close below 72.20 would probably say, uh-oh, there's a little bit of a top coming up here. Leg E in the monthly, but so far this is really good action in the oil, crude oil, 73.71, down 63. And now we're going to go to high-grade copper, then we'll go to bonds, and then we go back to our Roman candles, Chapman wave Roman candles. 2.76 in the high-grade copper. In the lower range of this, of each segment, that goes from like 3.40 down to 3.20, then 3.20 down to 2.94, and then 2.94 down to 2.58. And it's in the lower segment right now. No real signs of strength. So now I want to do this, the TLT. Look at this. TLT has an update today, up 0.06 at 113.10. If ever there was a chance for it to have a little bit of a breather after the TNX, the 10-year, has screamed to the 32.33 level. This is a G/C. So far, I'm calling it a C. I think there's going to be one more little pop-up to the upside, and then maybe we can have a bit of a pullback in yields. This is the 10-year yield. Got it in leg C in the weekly chart, leg D in the monthly. 33.27 is the monthly 200-period moving average. Us to try to get close to tagging it. I'll be right back. Basil Chapman, Tiger Hour. We're going to talk about Chapman wave, rope candle, as we have the last 2 days. I'll be
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, everyone. So the Roman candle. And I got a question in the den, which I'm putting down now because I need to remember that, to go back to it. So I just want you to say, for the question in the den, Basil, Dow Jones Industrial Average, is that a massive failure, January, October 2018, fall back to February lows? So first of all, let me just say, for the first time in my automated Dow charts, this is with the Chapman Wave automated projections of resistance and support, 27,506 is the monthly resistance, 27,055 is the daily, and 26,573 was the, still is, it's printed there, is the weekly chart resistance. 26,573 is in the 10-minute, and 26,915 is in the 120-minute chart. And underneath, we've got a ton of support levels. We've pierced most of them. Now it's 26,144. That's the next one down. Just want you to get that out of the way. I'll come back to it and I'll explain what I'm looking at in a moment. But let me go back to this pattern that I'm talking about, which is the Chapman Wave Roman candle. I discussed it in detail, sent it over the weekend to my subscribers to my opening call, discussed what it pertains to and why, if it comes off the top, remember, look here in January, right off the top, I said, the next bar after the January 26,616 all-time high was a Chapman Wave Roman candle. If the Dow, this is a monthly chart, on any one-week basis, starts to trade and close below halfway into the wick of February, there's a real good chance not only will you test the low of that wick, but you'll break it. Well, we went from 23,360 on February, I think the 2nd, or 9th, and then we went to, in April, we hit 23,344. So it fulfilled that particular obligation. When it's done it before on the monthly chart, back in 2007, oh, should I just scroll there? Yep, I will. 2007 in October, a doji candle at a peak, a leg F in the Dow monthly, 40,198. The very next month, and this is the perfect conditions for this particular formation. The very next month sees a Chapman Wave Roman candle. What is the Roman candle? where very often it gaps down, but what happens is that it opens, makes just one fractional tiny little wick. That's a little wick that you want to light for that Roman candle. And then it plunges down, and somehow or other, that very same candle closes about 50% or a little bit more than 50% above the low. If the next session there is a trade halfway into the wick and it holds for more in the daily chart, I'd say 2 hours, you'll likely take out that low and go lower. And that's exactly what we did. We had another one on Friday, not 100% perfect because that wick was a little bit too big, but it was still the same pattern. Lo and behold, today we went for, now it's 3 hours, but it was actually within a short while, we were trading into the wick underneath 26,000, what did I say it was? 26,400, I think. Yeah. And then what happened was, lo and behold, we've taken it out. And what have we done? And I want you to spend time on this chart because it's so important. Look, there's an up channel. I'm going to make this bigger so you can all see it. There's an up channel from the highs that were made, and we went into the Chapman wave inside track of the up channel with a little mini up channel. We went right to that level, snuck above it for a second, just as we did back on the high of the 21st of September, 26,769. And then we went back down, hit the 9-period moving average, rallied, and we did exactly the same thing on Thursday. And then what happened was, all of a sudden, we're looking at what? We're looking at the 9, the green line, and the 14, the black line, having very strong resistance. And that strong resistance was met today, and that's where we reversed. The market was down 100 points, the Dow, and then it rallied sharply. It actually went up about 18 points, and then it turned around and came down to a lower low. I think a chunk of this particular phase might be done because we've just hit the Chapman wave inside track support level. Could be called a buy zone, but we don't want to be in a buy zone when the pattern is obviously negative, expecting lower lows and lower highs. The MACD is very negative. Stochastic is very negative now at 62%. So I'm anticipating, and I drew it in my other charts, a little bit of an arch formation. 2 consecutive Chapman wave Roman candles producing exactly the same result. If you're looking at the E-mini just made a little bit of a low right here at 28.66, round number low, and now it's gone to a leg C in the 2-minute chart. And I suspect there's a real good chance that we've just made, it looks like we could have just made the low for the day, and now there's going to be a rally attempt, and the rally attempt might go into Tuesday, maybe even Wednesday. The VIX at 7 in the 17s needs to come down quite a bit more. Now let's go back to our story for the Dow. So a number of things have happened. Doji candle leg E and a close below the doji low the following session. Number 1, right in the Chapman wave inside track, upper channel, inside track repellent zone, got repelled. What does it do? It pulls back under the 9-period moving average, closes above it. Then on Thursday, Friday, it goes below it, and it closes under the black line, which is the 14-period moving average. And what we've got is the MACD very wide. The distance between, is that the theta? Anyway, the distance between the slow moving average, the 26-period moving average, exponential moving average, and the 9-period differential, the green line, is very big. It means that any rally is probably going to fail at some point and come back down again. But the stochastic at 62.91 is also making very wide distance between the moving averages, and it's going to be kind of tough to sustain a rally other than to have a rally. Okay, so that's that. Oh, what happened is we came into the inside track, both the up channel support level and the inside track support level. So we have to go above 26,420 to really get out of this, the magnet of this pull, this up channel that keeps pulling you back into it. So if we can do that, then you've got 26,519 as a potential for an arch formation somewhere in the 26,520s. That's where we watch to see if there's going to be a reversal, if it can even do that. Oh, got that out the way. Now let's just go on, because what we want to look at is in the context of the markets, the dollar is holding really well. And that, I think, is what's putting tremendous pressure on the euro, which went to a lower low today. Now it's in leg B to the downside. And the weekly chart has an arch formation, very critical, at 1.14, down 0.004 if it breaks. 1.14 support at 1.3, is that 8? 1.130 low that was made back in the week of the 17th of August. That becomes a target. So be careful, USD JPY, as we go out to our second break, and then I'll take some of the questions again. I'll come back to the question of the longer term chart of the monthly. Look at that peak D being made in the weekly dollar, yen.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, so this black chart that we're looking at, I've shown a number of times lately, is this very long-term Dow chart. I could go back even further, but I really want to go to the low that was made October the 19th at 1616 on the Dow, the October 1987 crash low, and I go to the bottom of it. I've always found there's a certain technique that I use, and I want to repeat the same type of technique over and over. Well, if I draw a trend line up, it goes to a whole bunch of higher highs right to the 2006. 2006, that should be a 7. Oh, sorry, to the 2000, to the 2000 high, year 2000 high, peak E. And then, of course, there was a little bit of a pullback, and it went from 11,749 to 7,197. And then it started a brand new move. And this one had an inside, it had a channel, up channel, but a different one to the trend line, because that trend line just keeps going and going and going. I had found years ago when I used to draw by hand the trend lines, and I used to use this engineering graph paper. And 1-to-1 was the 10 points was 1 point, if I remember correctly, to each little square. No. Well, each little square represented the same number as when the Dow was at the low of 40 back in 1932, and 386 in the high of 1929, and right to the high in 1987. Right to the high of 11,749. So I have to keep adding squares to. I have to take these squares. So I have this long piece of, like almost the entire wall vertical. And I used to hand draw. So I had this 36-inch ruler, and I used to draw these lines. And I was always shocked. And out of the blue, like 4 years later, I'm looking at it, and it hits a trend line. And it hits a trend line. I forgot all about the trend line. I checked where the trend line came from way down. Well, look. This trend line just kept going higher. It's almost like a 200-period moving average where you just don't even care about it until you get close. But all of a sudden, at the high of 26,616 in January, that light blue trend line with an inside, now I put the inside track of the red dashed line, little mini dashed line, it gets hit. And then it pulls back sharply. It goes from 26,616 to 23,360. And then it rallies back, and it goes to the red line, not the blue line, but the red line, the inside track, the start of the repellent zone, and it gets pulled back. Now the question comes up in the den: is this how serious can this be? Is this going to take us back to that February low or April low? And here's my answer: if you look at the peak E to peak F in the Chapman wave methodology. Look at this fun little peak F to peak G in the sharp pullback back in August, the May to August 2015 high of 18,351 to 15,370, a 3,000 point pullback. So 3,000 was about 18% or so, 20. So what we're looking at here is a situation where there was a little V-shaped pattern and a sharp pullback. Look at this one here, peak D, and a little double top, didn't make that peak D, and that was the high that was made back in May of 2011, and then it falls sharply down to the October low. But we went to a peak E and an F with a shorter period with the same kind of pattern back in 2007. You remember in the summer, we made that peak E, and I said, I'm going to base this, I think it was F. No, it was E in the weekly chart, and I said, I think we're going to make higher highs, and then we've got to be careful. And lo and behold, we went to the 14,192 high in October. It went to a peak F in the monthly chart. I believe that was F and G in the weekly. And the pattern we were looking at was what I call the double camel hump. I always make these expressions. So where the arch of the MACD or the stochastic has an M-shaped pattern, another arch, but only one of the technicals really confirms the rally, and that says there's a divergence that's going to be a negative. Well, wait a minute, there was a D to an E, the same kind of pattern back in 2000. And what was that, 2000? Back in January of 2000. So my answer is, if the weekly this Friday gives a signal that says in the alternate wave count, and that's really what's important, in the Dow's weekly alternate wave count, look, what we've got is a G/C. If there is a close in the Dow, either this week or next week, without any substantial rally, just a minor rally, but we keep making lower lows and lower highs. If there is a close below 26,000, I said to subscribers, 25,900 is really what I want to see. A close below that says, you know what? there's a much greater chance we've just made a peak G, because the MACD at that point will probably turn negative. Stochastic at 88% could quickly go under 80%. And that's where I'd say now we've got to look at that chart of the monthly to see where we are, because the technicals are still not as good as they were in January, but they are still very positive. So here's my answer. And I'm trying to, for subscribers, we're trying to position ourselves in this particular manner. This particular decline that started last week in the Dow, but it started a while back in the IWM, as I showed you, IWM made its high back in, that was, I think it was in, there it is. Back, I didn't put the date here, the date should have been back the last week of August. And because of that, it's already had time to garner some downside activity. And I'm saying that there's a chance that the Dow is the last one to make its all-time high. New York Stock Exchange hasn't done that at all. And as a result, I've got to monitor this really closely, because if the Qs follow, if the XLK, which has been a leader to the upside, and that looks like a peak F top in the weekly chart, I can't call this an alternate count at all. Looks to me like it's an F, and probably this week I'm going to put a down arrow there. MACD turned down. Stochastic says under 80 at 76%. Peak D doji high that was made in the 76s, trading right now 72.38. This is really a big deal, because I've got a leg E in the monthly chart. We might be looking at more time, maybe than price. We might be looking at price more than time, or we could see the two together. All I'm saying is that the upside at this particular point seems really limited. I just don't see any chance of new highs in October as it stands right now in any of the indices, including the Dow. And therefore, the weekly charts, if you go to look at an Amazon, peak E in the weekly chart, leg E, probably a peak E this month in the monthly, but that is such a huge move. It could even pull back from 1848 right now to the 1700, 1600 area and still be in a leg E. Or it could have been a recycle. This could be E/A, and you just see Amazon with a new all-time high. I have to consider that's probably not an F. That's going to be like a B, because the chances of this increase, the monthly charts for the past year and a half, I'd have to say, these instant restarts in monthly charts, which used to be a little bit rare, they've been happening more frequent, and they seem to have taken charts E's and even E's after. I'll be back, Basil. 119.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So to sum up, I just wanted to say that I like to go step by step. I haven't even got a sell signal. I have to, in the weekly chart of the Dow or the S&P yet. Let me just double check before I go any further. SPX.X, S&P, nothing. There could be by Friday. There could be a sell signal. I'm pretty sure there's going to be, but as of Friday there wasn't. So until I haven't got a sell mode, which these are just definitions of where we are. And the definition of a sell signal is a close after a D, E, or F, or a G in the chart that sees the price close under the 9-period moving average at least once, preferably kind of deep under it, with the MACD negative and with the MACD about to close negative, stochastic probably going closer to 80% or under 80%. But a sell mode says that the price is underneath both the 9 and the 14 probably. The MACD is very negative, and the stochastic has gone about probably down to the 70% or lower area. And I haven't even got that yet. So all I can say is one step at a time. Monthly stars still very strong in most of the indexes, other indexes. So let's just go back. So that's with the Dow. But as a target to the downside, question about the Dow. The question of the Dow says, where do I think it's going to go? I believe that at some point we will test 25,800. How we close below it is going to be really important in both the weekly and the monthly charts. But I like to go step by step, and we're on a short, we're short, so we can let it just play out. We'll see what happens. Next question was, are there any industries that are not EFG in the monthly chart? Last phase of the code is still to come, sometime 2019, 2020. Yep, that's what I think. I got other reasons for that as well, and it has to do more on a political basis. I'm not going to get into that under any circumstances at this point. No need to. But what I will say is, look, the IYH, which is the healthcare area, which was fantastic, made a peak D in the daily at 204. It's trading out 199, 5 points down. Big deal. What is that, 4%? Not a big deal, but it is a potential peak F in the weekly chart. I don't know yet because there was an instant restart, but it's gone straight up, and the MACD is about to turn down, but it's still very strong. And the stochastic is very strong at 92%, but turning down, as is the RSI and the on-balance volume in the weekly. And yes, in the monthly chart, I am in a G/C. Everything about it suggests more that it's a G than a C. But yeah, the answer is with that instant reaction. This is what I was talking about. How many monthly charts have started to make peak Ds that have become important? That is where you go to the fourth highest peak after identifiable low bar in a buy mode. And then instead of doing a sharp pullback within 2 to 3 sessions, doesn't matter what time frame, 2 to 3 sessions, it breaks to a new high. And that has an alternate count EA, FB, and GC, and the MACD and stochastic are still very strong. So that's one of the sectors that's still very strong monthly wise. And my favoring of it is not a G, but more like a C. Oh, now let's go through these backwards. Going backwards in the emails that came in, EWI, Italy, I believe. Italy, I said, be real careful. Whoa, that was back at 27 something or 28. Now it's at 26.37. Don't mess around. A, B, C, D, peak E in the monthly chart at the 200-period moving average reverses sharply down. This is the EWI. This is the iShares Italy ETF. Next question I had was EWH. Hong Kong, EWH, lousy, down 0.30 at 22.56. I spoke about it in the 23.42 area. Now it's under the 200-period exponential moving average, gapping down on a weekly chart. Monthly doesn't look good. I have to tell you, I'm getting more and more nervous. So the long positions that we have, we still one of them, we still have a really good percentage gain, but we've given back a lot. It went from 119s to 144. Now it's at 136. I would love to keep this longer so that when the market eventually turns, this shows that it can be a leader. I'd have to think about that. I'm not going to give away too much. So you got to be real careful on the long side. Now, one of the things we're looking at is in the FXI. Remember, I said the same thing with the FXI. Don't mess around. It was in the 42s when I looked at it. I said, I think it's coming back down. It's going to go under the 200-period moving average of 41.38. It's a point lower. It's at 40.33. Be careful. Those monthly charts are really not very good looking. V, yes, V is, that was a spectacular move to the upside. Doji candle all-time high at 151.56. I meant to look over the weekend, didn't have a chance. No round numbers. 151.56 all-time high. October the 1st, 151 trading 141 right now, just in a week and a half. Whew. And now look at this monthly. Is that a G/B? Is it a B? Everything about this suggests that this is probably a peak G in the weekly chart and a leg E, still only an E in the monthly with a Fibonacci at 161.80, no, 145.38, I'm sorry, just above the 161.8 retracement. And it turns around at 151, and now it's underneath that support level. Okay, that was that. EEM, it's the same thing. I'm just repeating myself like a broken record. Yeah, just be real careful. Yeah, there could be a counter trend rally, but this is not good news. Next question. Oh, this is very nice. Last week, George sent me an email. I mentioned it on air, but I also forgot to mention that he was looking at GE, and to briefly put that into the sentence that he sent me. This morning he says, "Good morning, Basil. Hoping all is well." What is GE right now? GE is trading at. Let's see what it is, and then we'll see what he said. GE is up 30 cents at 13.48. Made a low of 11.21. A multi-year low. Okay. Good morning, Basil. Good morning, George. Hoping all is well. Yep, all is well. I wanted to mention I started to add GE last week at 12.20, up over a point and a half. Oh, over 11%. I got impatient. I also had bids on leap calls to 2021 on GE, slightly out the money at 15, but to no avail. Have a good show. George, we'll have a good show with this because you did a real good analysis. I didn't actually read it, but you did say you thought that like Valiant, which you've been long for a year and a half, successfully long, Valiant Pharmaceuticals. Can't remember what was taken over. Is this now BHI? Why am I trying BHI? No, I have no idea. I can't remember what the symbol is, but you had mentioned that, and it's done fabulously. So GE has gone to a leg B in the daily. This move in the monthly is not unlike what we've seen before. Back in March, it did that. It just jumped from the 1260s to the over 15, and then it pulls back a little bit to under 12 to the 11s. Now it's at 13.50. I have to tell you that I think this is the start of a basing phase. I would not be surprised if when all this discovery that's gone on, and a lot of people are talking about GE and they think it's turned the corner, wouldn't be surprised if there's at least one more sudden disappointment. It's as if that doesn't take it to a lower low and it holds very well the low that was made at 11.21 on the 26th of September. That will say to me that we're going to start to see a basing phase for GE for the first time in years. I'll be right back. Dow's down 130.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So just real quickly, the E-mini rallied from the 28.65 area to about 28.76.5, and now it's pulling back. I'm looking at this and I'm saying, you know, this is not good. This is just, it's really not good. And the fact that we are testing the Chapman Wave fan expansions in the Dow Daily. You see the red line, the green line, the black line, the pink line, and the very deep gray line. We're on that pink line from the high of 26,769, the 21st of September, going down to the highs that were made on those little rallies. So we've just taken out, in fact, we hit it exactly right there. The load so far today is 26,223. Just got to be careful. I can just tell you, if we break 26,000 in this move down, we're going to be matching the January decline with very few rallies that hold. And that makes me very nervous. And 26,144 is the 120-minute support. A couple of quick things, because XLI had a question about, the XLI is the industrials. It's actually holding pretty darn well. It's down 40.44. It's one of the better indices right now. That's the reason why I couldn't answer specifically about the monthly chart for Z in the Den, about the Dow. Will it go down to the February low, April low? No, I have to go step by step. If there continues to be a rotational aspect to it, it means that we could very easily use up time for some of the sectors and pricing the other sectors because they are very overbought, like the Qs and the XLK, like the IWM. So that's the answer. So that was that. And the XAL, which is the airlines, another lousy day today, but not as bad as making a little doji candle. It's got the arch formation in the weekly chart. Not good. Looks like it's going to retest the 99s, 99.10 level of the 200-period moving average. So let me just do this. I had a lot of questions from subscribers about different things. I'm going to try to deal with that. I'm going to try to send my newsletter out as early as I can so that you can get everything and have plenty of time to get your positions. I'll do my best to do that. But the most important thing is, yes, we've had positions that we've had since April and May that were still long, that we're still holding. So it's not just a short-term traders thing, and we could be out within 2 minutes. At the same time, we could be holding for 6 months or more. So it's really a diverse portfolio we have. Hold on, we've got Steve. Steve got a workshop tomorrow night. Check out front page.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.